Okay, welcome back. Thank you so much, everybody, for coming back and joining in. Today, we have our speaker too, Mr. Vedant Gokhale. Mr. Vedant Gokhale has been in the derivatives and quant world for 4 years. He recently recreated the entire MSCI India index, along with the entire Nifty rebalance and CPSC rebalance, where he predicted the next stock additions and deletions of 100% accuracy. MSCI semi-annual and quarterly rebalance, along with creating a quant fund that heavily outperformed Nifty. He mainly looks into data, and today he is here to share with us his insights and his knowledge. Thank you so much, Mr. Vedant Gokhale, for making it on such a rainy day. I think you're a bit tired, but our audience is very eager and enthusiastic. They'll be asking you a lot of questions, so please be ready for that as well. Thank you.
Yeah. Thanks a lot for that introduction. First of all, thank you, Finbridge, for calling me up as a speaker over here. So anyway, I'll get right into my topic. So today I'll be covering a full different side of the derivatives and quant world. So, when it comes to options, I've seen people mainly cover, IV strategies, mean reversion, then after that hedging strategies, and, option Greek strategies. But over here, what I'll be doing is basically finding the direction using purely option data and a number of different quant data. So I'll be covering a wide amount of topics. So the first one is understanding the participant-wise positioning in the market. So basically what we'll be doing is understanding who we are betting against in the market. So I'll take an example of a, say, army sniper. So beside the army sniper, there's a spotter. So it's his job to understand where the enemy is located and, get an edge over the enemy, understand who the army is betting against. So just like that, we will be doing the very same thing, but in the stock markets. Then after I'll be showing you guys what is the put call ratio, avoiding bull bear traps with it, trading with it, and getting your trades bang on with PCR. And then I'll be covering a very different topic. It's called as open interest shift and option strikes. I'll be getting to that later. And finally, I'll be covering on my own thesis, that is open interest, exhaustion, and buoyancy. So anyway, let's get right into my presentation. So first of all, understanding the participant-wise positioning. So first of all, there are four main participants in the market, as we all know. It's the FIIs, it's the DIIs, it's the prop traders, and it's the clients that are retailers. So in the next slide, I'll be showing you guys a matrix that I have made showing, where on a risk-reward graph, where who is located and who is betting against who. So this is a small matrix that I have created myself. So first take a close look at it. You guys can see the risk over here and the reward over here. So let's start off at the bottom left side, that is the institutions. So the institutions on a normal basis, when the market is running on a normal day, they run arbitrages. They may be long, they may be short, but they run arbs. So who the arbs bet against are basically the long short speculative guys. That are the non-institutions. That can be clients, what so on. So what happens usually is, as I've written over here, when the cash to spread opens up, the institutional side, that means these guys, they bet against them and they start to eat into the profits of the long short guys. This is on a normal day. But when on another day, it's the long short speculative guys who eat into the profits of the arb guys. So it's easier to show this to you guys. But now I will actually show y'all in practice how this has actually affected the market and how you can make money or improve your trades using this method. So before I show you the actual historical data, I'll cover the other part. That is the option writers and the option buyers. So as the previous speaker, Mr. Mrinal, covered that, mostly it's option sellers who make money. And I totally agree with him. So, in theory, it's when you listen to the payoff of a option, of a buying an option, it's, your risk is limited and your reward is unlimited. And when it comes to option selling, it's your risk that is unlimited, but your reward that's limited. If you show this to any guy outside the markets or any other retailer who has no information on what options are, they will obviously say, let's buy options. And, but in practice, it's the option sellers who win, and I will be showing you guys why. And once again, coming to my risk reward graph, when it comes to option writers, the risk is high and the reward is very low, as you can see. When it comes to buying, the risk is low and the reward is massive. But the main twist over here is that it's the institutions who are selling the options and it's the non-institutional people who are buying the options. So now the next sheet I'm going to show you guys is an Excel sheet that I have made and compiled, which showing all the FII, DII, client and prop positioning in the market from 2017. But what I have done is I have taken some recent examples of when the markets were running normally without any, geopolitical factor affecting it. Like right now there's COVID, so I haven't taken a recent example because of the, geopolitical factor affecting it. Before that we had the, China, US feud, so I haven't covered that. So whichever time frame where I felt fit when Nifty made a top or bottom, I have covered that. So let's take a look. So this is the historical significance of all the data. Whatever I have said, I will actually prove it to you guys. So first of all, on the screen, you guys are seeing Nifty on 28th August 2018. So as you can see, Nifty is hitting its all-time highs back in 2018, and then it severely crashed, wiping out a hell lot of gain by almost 15% in just a matter of 2 months. So what I would do is, what a smart trader would do is, take 1 second. Yeah, on this point over here, that's what I will look at. I will want to see where are the smart guys, where are the FIIs located. So what I'm going to do over here is, or what I do personally is, I follow what the FIIs do. So if the FIIs are going long, I will go long. If the FIIs are going short, I will go short. And now we will see as clients, who are we betting against in such a scenario. So if we are positioned over here, what should we do next? What should we look at? So this is what I'm going to show you guys. So first of all, this sheet might look very overwhelming. I have shown the breakdown. So basically, it's this date that we are covering, and index futures net, index options net, index option net call positions, and index option net put positions. So now we will decode the more important data from this massive Excel sheet that I have shown you guys. So from this Excel sheet, you guys can see that the clients are heavily buying options. It's the FIIs that are selling their options. It's the DIIs that are also selling their options. And it's the that is the prop traders who are also selling their options. So as I said, let's just go back to the matrix for just 1 second. So as I said, it's the option writers who are the institutions who sell options, and it's the option buyers who are the non-institutional who buy the options. So looking at this, we can, confirm this fact. It's like a law that, the clients are buying the options, the FIIs, DIIs, and props, the institutions are selling the options. So just looking at this blindly, I would feel that this is a strong sell trigger, and I would definitely short the market. So this is just one example. I have covered one more example. So the thing is, I could have covered n number of examples, but it would have taken way too long, and I have chosen the most accurate times when Nifty fell and Nifty rose. So let's look at the next example when Nifty gave a great return or crash and where the participants were positioned. So here we have another example that's a little more recent example of Nifty on 19th February 2019. So as you can see over here, in just 107 days, Nifty moved 14.25% after forming a bottom over here. So what I would do once again is, I would again want to see where all the smart guys are located, what are their positions, who am I betting against as a retailer. So let's take a look at what happened and where were the participants placed right before this massive up move of strong almost 14.30, 14.25%. So once again, I have the same Excel sheet in front of you guys, the very same Excel sheet, but a different date. So now from this massive Excel sheet, let's take out the most relative and the most, trigger, the strongest trigger of information that we can find. So as we decode the important data this time, as I said, we are following the FIIs. We are not following what the rest are doing. Just according to the matrix, I'm just trying to show you guys that my, not thesis, but my view of point or my argument makes sense. So over here, we are seeing that the FIIs are once again. So this time it's net call option. So over here, you're seeing that the prop traders are selling the call options. When you're buying call option, your view is bullish. So it's the FIIs once again who are bang on spot, bang on point. This time, usually it's not always the clients who make money, but they are right. I'm not saying they are wrong. So once again, clients are buying, FIs are buying, DIs are buying, all of these guys are buying it from the prop traders. So once again, let's take one more look just to, clarify the matrix showing that option writers, the institutions are selling to the option buyers, that are the non-institutions. So this concludes the first part, that is, showing how the top guys, the big guns, are located or positioned before a very big up move or a very big downfall. So I look at a number of more things. So this is just one part of my trading war chest that I'm sharing with you guys. So this is the first mantra I follow, is to follow the foreign institutional investors, because they have more data than us, they have better research than us, they have better understanding of macro trends than us. Overall, they are the whole package, and I believe we should follow them. So anyway, now let's take a look at the next part, that is gauging the put call ratio. So before, in the previous presentation, Mr. Mrinal said, he looks at indicators, that is MACD. But over here, I don't feel put call ratio is more of an indicator rather than a, data analysis. Because if you go on any software and if you just type, in your studies PCR, you won't get it. You'll have to either manually calculate it, or you'll have to either get your own software, charting software, to find the PCR levels. So first of all, as I said, what is PCR? So PCR can be seen in two ways. That is trading volume based PCR and open interest based PCR. So over here, what I'm looking at is the open interest based PCR, because my full PPT and the other parts of the PPT are heavily linked to options and their open interest. So anyway, let's take a look at this. So PCR is nothing but the total open interest of the puts divided by the total open interest of the calls. So after that, how reliable of an indicator it is? As I said, it's not directly an indicator, more of a analytical study, database study. So how reliable it is? I personally feel, you guys might not agree, but this is my view, that PCR is one of the strongest factors that I would look at just before entering a trade. In the next examples I have shown is how do you avoid bull bear traps and whatnot. So anyway, so PCR is basically, if a PCR of a stock is really high. So what I see is that there is a lot of bullishness in the market. That means the ratio of the puts that are written is higher than the ratio of calls. So that, just looking at this, I would just long the market. And the other way of looking at PCR is, if PCR is really low or it has dipped, it means that the call writing in the market has increased and the put writing has decreased. So it means that if PCR is high, the put writers are aggressive and the call writers are passive. While vice versa, it's the call writers who get aggressive and the put writers who get passive. So in my next snapshots, I have covered how this actually happens in the market with live examples in how options this PCR actually works, and the notional open interest actually flows into every strike. So as I said about PCR, there are two different styles. So there's contrarian and momentum. So we are over here following a very different style. So in one style, they believe that if PCR is high, you're short on the market, while if PCR is low, you're bullish in the market. Usually this style of understanding PCR usually works in North American markets and the European markets. But me and in India, we follow that if PCR is high, we are bullish. If PCR is low, we are bearish. So as I showed you previously, the actual historical data. So this will be the first example of actually understanding how PCR works. And right now, what I will be showing you guys is understanding how to avoid traps. Usually when it comes to trading, the biggest mistake we get is, like, oh no, I've got caught in a bear trap. My stop loss has got triggered. I've got caught in a bull trap. My stop loss got triggered. I'm getting a margin call. So let's take a look at the first example. So this is a very recent example. This is PVR bull trap. So one second. So as you can see over here, PVR had broken its resistance zone. And if you see, its open interest levels are also very good, very high for the month. The average open interest is very good. Then the delivery data, this is the most important. I personally feel right now for this script shows that it recorded 4 years. This is a full 5-year time frame that I've covered, guys. And this shows that the delivery data, the raw gross deliveries, that the number of shares that have gone into the demat accounts of fellow investors. So this shows that it has recorded its 4-year highest deliveries. As you can see over here, it has peaked in the last 4 years. So looking at this much, people will definitely want to go long. Look at the trend analysis, MACD, RSI, everything. People will definitely want to long this stock. But if you look over here, this is the RSI, this is the PCR column. So I have zoomed in over here showing the PCR levels. As you can see this dip. The second I see this dip, it shows that the call writers have gone aggressive on this stock. The stock has been heavily, the range of call options in the stock option chain has been heavily shorted. That means that the PCR overall ratio of the total open interest in calls to the total open interest in puts has heavily reduced. Just looking at this, I will definitely short. So also one more thing I want to add. So I would also see the participant wise positioning, as I showed you before, being a sniper. So I would also look at that. But over here, I'm going to cover everything individually and just showing you guys that even with one thing, you can get your trades bang on. So this is one example of a bull trap. Now, this is another trade very sentimental to me because I spotted it myself. And so imagine in a pandemic, okay, in a health crisis, I tell you guys, short a pharma stock. People will be like, no, why will we short a pharma stock that is especially near its 52-week high? So this is one mantra that I have been told a lot in the markets, never short a stock before its 52-week high. And especially a stock that is in favor of global macros. That is a pharma stock, which was heavily in favor of global macros. So as you can see over here, it's almost about to break its 52-week high for the first time, obviously. And if you see the delivery data in the last 3 months, that is the last quarter, has been the highest. And open interest levels are also starting to climb and are above its monthly levels. So why would you want to short the stock? There is no reason to short this stock. But the minute you see the PCR levels over here, they have suddenly dipped. Looking at this PCR level, I will want to short this stock just blindly looking at PCR. I recommend you not to. These are just examples of how reliable and strong PCR can be because it literally shows you, what the option writers, what the option sellers are thinking. And by option writers, I mean the FIIs. Once again, correlating to my matrix, I'm showing you guys how the top guys, the top guns are thinking. So I have covered two small examples on how do you avoid bull and bear traps. Now I'll show you guys how do you make money finally out of PCR. How do you get your trades right? How do you spot trades? So the first example we have over here is HDFC sell signal. So as you can see here on a whatever, if you add your other indicators, MACD, RSI, Bollinger Bands, on a Bollinger Band, this would probably show a breakout, a squeeze and a Bollinger Band breakout. But over here, all I saw is open interest levels are good, deliveries are not very impressive. But the PCR over here, I have zoomed in over here, has dipped from 1.06 to 0.89. That means that the total amount of call writing has increased from the rather than the amount of put writing. More people are selling call options than put options. So just looking at this, I will want to go short. So if a person would have just taken this trade, just looking at PCR, would have got a good 11.29% return in what, less than almost 15 days. So I feel that this is a very strong indicator. As I said, not an indicator, a study. So this is just one example. Let's look at a buy sign now using PCR. So we have IndusInd Bank. So IndusInd Bank, after the full Vodafone Idea exposure news, it's been battered very badly in the Indian markets, and it hadn't made a proper recovery since after the COVID crash. It just things kept getting worse for the bank, and especially after the Yes Bank fiasco started affecting other banks. Overall, IndusInd Bank was not a good pick. Even fundamentally, even traders were staying away from this with the amount of volatility in it. So after this was the turning point in IndusInd. After this one bounce, everything has changed in IndusInd. IndusInd has made a great recovery in the markets price wise. So now, how do you understand? How do you analyze this trade? I'm trying to tell you guys. So if you see the open interest levels are once again very strong, and deliveries are also relatively slightly above its quarterly average. And now finally, the main component that I look at is PCR once again. So after forming a bearish trend over here, what caused this reversal in IndusInd? So as you can see over here, I have zoomed into the PCR levels right over here. From a low PCR is suddenly shot up from 0.53 to 0.93. And wait, you guys must be wondering, how did you catch this shoot up in PCR? So in the next topic I'll be covering right now, I will actually show you guys the movement of funds, the actual raw money in crores of notional open interest in every strike in a stock. So anyway, as the green candle is formed, PCR seems to have shot up to 0.93, indicating that longs have started to enter, and this is a very strong buy signal. So what I would do is, as I've said before, I won't just look at PCR. I will also look at where the FIIs are positioned. Once again, despite PCR being very convincing, I will want to see what the prop traders are thinking, what the clients are thinking, who is selling to who, and then I will look at PCR, obviously. So this is what I'll conclude on gauging the put call ratio. So now what I'll be covering next is an even more in-depth topic that is also related to PCR, because eventually it's options. It's all options. So the next topic is OI shifts in strikes. So you must be wondering, what is this OI shift in strikes? So OI stands for open interest, as we all know. So every stock has its option chain, right? And every chain has its number of strike prices. So what I'll be analyzing here, what I'll be trading here is based on nothing but the notional open interest in terms of crores. The notional open interest in terms of crores that is flowing into every single strike in the option chain. So for example, Indecent example 300 call has been written and it has a notional OI of 400, and then suddenly I see that option writers are changing their way of thinking and they have moved their strikes from 300 to 350. So just like that, I will be showing you guys live examples of the recent last month Bank Nifty first week expiry. So how do you spot this? How do you analyze this? And how do you trade this? These are the three things I'll be covering with this. So let's take a look. Historical significance, as I've shown you everywhere else, the data turning into stats from strats is actually being practiced over here. And the first example. So first of all, I want you guys to just look at two things. I want you guys to look at the symbol, and I want you guys to see the OI change. This is my own Excel sheet. I have made it according to my way of thinking, and you guys might not agree to some of the data you've seen it, but I will show you guys in the next slide that the data is actually working and I'm getting action, I'm getting proper results from what I have compiled over here. So first of all, this data shows us what the option writers are thinking. So as you can see, first I want you guys to look at the first two strikes over here. That's 21,500 put and 22,000 put. So first of all, the law of my sheet says that whatever signs there are, all have been written. Means if it's P, it means there's put selling. If there's call, it means there's call selling, call writing. So first of all, 21,500 has a OI change of 189040 crores. So what is happening? And the next one right above it is 22,000 put. So this shows an OI change of 233,200 crores. So what is happening over here is, the money, the funds of the writers are going from 21,500 put into 22,500 put. This shows that, the writers are getting more and more aggressive by shifting their strikes. They are going a strike above and they are getting way more aggressive. And now what about the call writers? The call writers are over here at 23,000 call at 164,480 crores. So what is supposed to happen the next day according just by looking at this data? So we should get a strong up move in Nifty, but the resistance at Nifty will be placed at 23,000 call. So what can happen? You can make two trades out of the situation. The first trade will be long, sorry, this is Bank Nifty, apologies. So the first trade will be long Bank Nifty and the second trade will be sell Bank Nifty when it retraces. So it will definitely have to hit 23,000, the levels, and after that it will definitely retrace because of the resistance that is created by the call writers. So let's take a look what actually happened by just analyzing this data on close or at 325 right before close. So as I told you guys, we will get an up move and we will get two trades out of this. The first trade being long Bank Nifty. So right from here, if a person would have taken this trade, he would have bagged a good 357 points in just one session. That's brilliant for Bank Nifty. And why 23,000 retracement is the second trade. So if you guys can focus on this one red candle over here. So this is a full 1 day candle from here to here. So as you can see, the price had gone till here, that is 23,000 levels, but then it retraced because we have a strong resistance at 23,000 call. Are you all getting it? So because of this, we can get two trades, long Bank Nifty and short Bank Nifty in that retracement. And in that retracement, we can also capture a good amount of few points if in case a person has, due to other kind of issues, technical problems, has missed out on the full Bank Nifty 1 day run, that is 357 points. So as I've written over here, the red candle went near 23,000 levels and retraced. So just like this, let's take a look at what happened the next day of the weekly expiry. So another example being, once again, just look at OI change and look at the first column, that is symbol, and the strikes. So on the 7th of July, Bank Nifty closed at 22586. So on close or just before close, what I do is I look at it just before close if I'm going to do an intraday move the next day. So just before close, this is what my data analytics tab showed me. So first of all, I want you guys to look at this, or rather than that, look at this first. 23,100 call has been written. Call writing is there worth 70640 crores. So what happened is the people who had written 23,000 call got their stop losses triggered, or if it did not exactly hit 23,000, they got passive. That means in fear of their stop losses getting hit and getting a margin call from their broker, they had to move their position. they had to move their position to 23,100. So as you can see over here, from 23,000, they have moved their position onto 23,100. So as an analyst, I will look at this and I will, the first thing that will come to my mind is, okay, the call writers are being very passive over here. While if you see the rest of the tab, it's all put writers that are everywhere. So this is a very strong bullish indicator on, according to me, by just looking at this. So and on a side note, when you calculate PCR, you will actually divide the total open interest, not this. You will divide this, the total open interest of this, divide by the total open interest of the puts in this strike. So that's how you use PCR basically, and this is how you dive deeper into PCR and understand this functioning. So looking at this data, the next day, what should have happened is this: another strong session in Bank Nifty, giving this time 388 points in just one sitting. Just one trade coming out of this, or another trade also could have come out of this. But if you see, the 23,100 did not have much scheme in it. Did not have that. It wasn't that convincing. Option. This is showing you what the option writers are thinking. This was not showing us a very convincing sign that a resistance will be built over here that is strong enough for Nifty to bounce back, for Bank Nifty to hit, bounce back and retrace. As over here, if you see, 23,000 had way more notional open interest, showing that, giving us a clear retracement, giving us two trades in one session, while this data has just given us one trade. So finally, after this, what would you do next on the last day of expiry? So on the last one day before the last day of expiry, this is what my data analytics showed me. I'm sorry. So once again, I want you guys to just look at the first column, that's symbol, and I column, that's OI change. So first of all, we see a complete shift of momentum. So what is basically happening here is, the put writers are squaring off their position, booking their profits, and on the last day of expiry, everyone's like, sell Bank Nifty, let's short Bank Nifty in the last day of weekly expiry. So this is exactly what's happening over here. So as you can see, there's heavy call writing, and finally there's one little put writing over here worth 99,160 crores. So what I should see is, once again, a very bearish trend is setting in on the last day of expiry. And with all the put writers winding up their positions before the market close on expiry, this is initiating fresh call writing in the market. So on the next day, what should happen is Bank Nifty severely crashes. I mean, if I would just wake up in the middle of the night and see this data, I would definitely close my eyes and I would short Bank Nifty. So here's what exactly happened the next day. Bank Nifty crashed heavily, giving, if a person would have shorted Bank Nifty, would have scored 554 points in just one sitting. That's minus 2.42%. So these are the few examples I have compiled of how you see the OI open interest shift in strikes. How do you dive deeper into PCR, and how do you get trades out of it? How do you avoid bear traps? This is just one part of what I'm covering. Now the last part of my presentation is a thesis of my own, that is open interest, exhaustion, and buoyancy. So when it comes to open interest, there are different ways of understanding open interest. So what I have seen is, most people see is, if open interest is plus 10%, price is plus 2%, it's a long build up, they'll go long. If open interest is plus 10%, price is minus 2%, they'll go short. If open interest is minus 10%, price is minus 2%, it's a long unwinding. And the other thing happening is minus 10% open interest plus 2% price, it's a short covering. So now what I am seeing in open interest is a very different way of thinking. So this is also one thing that I add to my trading war chest, but it's not always that this will come right. This is just on these particular events, after a long profit booking session, after the market has climbed a lot, and it's time for people to not roll over, rather than encash their positions out. This also works during a rollover, when the rollovers are very high. So anyway, let's take a look, rather cut the talk short and enter into the exhaustion buoyancy world. So first of all, what is open interest exhaustion? So open interest exhaustion and buoyancy is a cycle like phenomenon. So first of all, when short positions get covered, making the open interest hit a bottom, that means OI gets exhausted, and after that fresh longs are built up. So just after that, what is buoyancy? So buoyancy is when long positions get unwinded, making open interest hit a peak, while when this happens, the stock price or the index hits a bottom. So it's inverse what's happening. and after that fresh shorts are built. So this, and open interest once again gets buoyant. This is called buoyancy. So why does this happen? As I said, because of unwinding of positions, because of profit booking, because of rollovers. So the first example of open interest exhaustion is over here. We see that OI gets exhausted and Nifty peaks. That means open interest hits a bottom, but your index hits a peak. So this indicates that a short covering trend happens and then shorts are built. So shorts get covered and then once again shorts are built. So as you can see, open interest has hit a bottom and Nifty has hit a peak. Open interest has hit a bottom, Nifty has hit a peak. There are multiple examples over here. So I have not taken this area into consideration. As I said, this is a full 5-year trend that I have followed in all my charts, all my graphs. And because of the geopolitical factor that is COVID, I have not taken this into consideration, though you can clearly see over here that open interest is spiking, hitting a top, and Nifty is hitting a bottom. But this is buoyancy. So that's why I have not covered it in exhaustion. So now coming to buoyancy. This might seem a little overwhelming. The thing is, there were too many points to trace out. So wherever I have made a red box, just look at that. So this time with buoyancy, when OI spikes or get buoyant or Nifty tops out, this is because of the exhaustion of the long positions. And after the long positions are covered, it's the shorts that get built up, making the open interest hit a top and causing the stock or the index to hit a bottom. So as compared to exhaustion, this is completely vice versa. So in buoyancy, as you can see, open interest is hitting a top and the prices and Nifty is hitting a bottom. N number of examples over here: tops formed, bottoms formed, bottoms formed, and tops are formed. This is just one example. Now, how do you spot trade triggers? So some stocks, where people say it's not बहुत liquid hai, it's not very liquid, and the open interest levels are not very convincing to take a position in it. But every stock has its own, according to me, according to my thesis. You guys might completely not agree with this, but this is just one part of the of my trading war chest. As I mentioned, I just always look at it by chance after a big profit booking session. If I start to see that there's a different movement in the open interest, and just by understanding this movement, you can spot a lot of traps and avoid them and get your trades bang on. So as I said, every stock has its own open interest parameters, its own open interest support and resistance zones, as I like to make it easier. So, or a buoyancy level or an exhaustion level. So over here, if you see Page Industries, despite having low open interest for a 5-year average, as I said, all my charts are 5 years. So for a 5-year average, despite having very low open interest, it's given some massive moves. One second. It's given some massive moves, just having such less open interest. So exactly. So for example, in the next slide, I will show you guys how the same stock, Page India, actually topped out with OI almost being zero or exhausted. It's never zero, but hitting its lowest point. So as you can see over here, I can't exactly zoom in on this, but there is a small ridge-like formation formed over here where open interest got completely exhausted and Page India hit a bottom. That means that the long positions have gone, like people have gone long on the market and have started to now unwind their positions. They have started squaring off their longs and initiating new shorts. So right after the formation of a peak, fresh short positions are made, causing the stock to once again tumble downwards. So once again over here, there are n number of examples. This is a very clear formation of a ridge over here, causing the stock to top out. Once again, I will be explaining it. Long positions have been built over a while from here onwards, causing the stock to top out. And once the long positions have hit its peak, these same long positions start to get unwinded. People start to sell off their longs. And after that, a short buildup begins, causing the stock to tumble. Once again, over here, another example. So this is just one example of stock stopping out with open interest exhaustion. This is another example, Motherson Sumi. So over here, we see even an open interest hitting an exhaustion point, shorts get unwinded, causing a covering effect. This is the opposite of longs. So once again, over here, we see a top, we see open interest hit a bottom, we see a top, we see open interest hitting a bottom, and so on. Now stocks bottoming out with buoyancy. So just like, as I said, longs get covered over here, it's the opposite. So long positions start to get unwinded, causing the stock to topple. As I said, shorts get built up. And right over here, when the shorts are built up, these same short positions get covered, are squared off, initiating new longs, making the open interest buoyant. That means open interest increases as new positions are formed. Once again over here, bottoming out, topping out, topping out, bottoming out, and so on. So I've taken a COVID example also. Over here, open interest has, usually it shouldn't be applicable on such a strong factor or news or event, but still I've taken the example over here. Open interest has hit a massive top and HDFC has hit a massive bottom. And the final example is Nifty. Over here we see Nifty gets buoyant, long start to unwind, causing Nifty to bottom out. As once again I'll explain it, long positions start to get unwind from here, causing short buildup, and that's when open interest hits its peak. More shorts are initiated, open interest increases, more number of contracts, and there you go. Open interest hits a top, Nifty hits a bottom, and so on. I can go on with examples over here because this is 5-year data, and I've taken some code examples as well over here. But this is not a clear top, but still applicable enough. This is a clear top, Nifty hitting a bottom. So finally, out of this talk, what should be your takeaways? So before entering a trade, so what I look at is not just this. I look at more things as well. But this is the important things I pay more focus and attention to. So first of all, participant-wise positioning, that's key. Where your enemy is situated, understanding who are you betting against in the market. Then PCR, reading PCR as I showed you guys, how do you understand it, avoiding traps. Then option data strike analysis related with notional OI shifts. So I personally feel that this is very effective understanding where you feel an indice is heading, just looking at what the writers are thinking. And after that, open interest analysis, this is not always applicable. This is, I feel, personally applicable after a very long trend. As I showed you guys, after a very long trend, it's causing an effect. After a very long trend, it's causing an effect. After a very long trend, it's causing an effect. So this exhaustion and buoyancy theory is not something that you look at on a daily basis. But when, for example, recently there was a serious sector rotation, right? From pharmas, after pharmas rallied heavily. I haven't added this is just my viewpoint I'm sharing with you guys. After pharmas rallied heavily, but despite this being an actual global macro factor, this can also be analyzed using open interest, exhaustion, and buoyancy. So once all the positions in pharma stocks started to get unwinded, money started to shift into cyclicals. This is what I saw. Metals index gave a very good rally. So if you would have seen the open interest levels of something like the metal index or of the pharma index, you would have seen exhaustion and buoyancy taking place in the pharma index. Because after a long trend, there is unwinding of positions. People are booking their profits on the longs they have made, initiating new shorts. This is just this. So this open interest analysis is just done after a long trend, as I mentioned. And then after that, what I do is I look at the basic charts, MACD, RSI, trend lines, and a number of other indicator studies, Bollinger Bands. There are over 100 indicators if you want to search for and learn. You can learn them. This Heiken-Ashi, whatever you feel like. Just to do your due diligence before you enter a trade, set targets, stop loss, and other formalities using basic technical analysis. Understand where the not open interest support and resistance zone is, but where the candle support and resistance is. Set your targets accordingly, manage your risk, and after you do all of this, you implement what you guys learned in the previous lecture, that is option strategies by Mr. Mrinal. So whatever he explained in the last lecture, that is what you implement after doing all of this, according to me. So, and last step, trade your heart out, guys. So that's it for the session. If you guys have any questions, shoot. That's it. Thank you. Yeah, Karan, I'm done.
Yes.
Yes, Vedant. Thank you so much. It was a great presentation. In fact, just to share, guys, we included Vedant's session. The reason is the kind of energy that he has, especially on the OI side, because ultimately it's an options conference. So open interest is my favorite subject, and what I understand from open interest is this is the way option trading has been done. So his detailed analysis, the in-depth study that he does in and out, all the concepts, I'm 100% sure that most of you guys must have really liked it. And it was a must for this conference. Plus, few new concepts like OI exhaustion and OI buoyancy. What I would request even to all the audience and also to Vedant is just figure out and give few recent examples related to nature of the client. For example, somebody is a bullish trader, he likes to trade the bullish trades, everyone is not very flexible in going long, going short all the time. So
Yeah,
for
so
somebody who is bullish, out of all this that you spoke about, or obviously a lot of questions will come in now. So just figure out those particular trades for a bullish guy and also for a bearish traders.
yeah,
What
definitely.
triggers you should look at. Overall, the presentation was extremely good. Now let's open for Q&A.
Yeah, sure.
Yeah, there are a lot of questions. There are a lot of questions. We have, Nitin Murarka, who is also the speaker here. Tomorrow he is going to speak. He is one of the very good analysts in India today, derivative analyst. He is saying great session. So Nitinji, if you are
Thank
hearing
you.
me, if you can come on the speaker and talk to him, it will be great.
If Nitinji liked it, I mean, these are the masters within the derivatives space.
Okay. By the time he will get ready, if he prepares his mind, I'll take some question. Can you see the chat box, Vedant?
Oh, 1 second. So is it possible you could read the question? I'm unable to configure the chat box at the given moment.
Yes, I will read it out for you. So,
Yeah,
so many people have asked about software. Which software are you using to chart the script plus 3 data,
yeah.
PCR volume delivery?
Yeah, so first of all, as the previous speaker said, if you want to be a good, you want to be a good cook, you have to learn stuff yourself. So what I have done for my just basic charts over here, this stuff is I have used MyFNO, the software, very good for options, I say, and this option data that I have pulled is actually from NSE. So what you can do is you can make your own plugin into Excel and actually get every minute-wise live data, and then you can just sort it out the way you like. You can get open interest, change, whichever way you like, and this is just one way. Then after that, how do you get stuff like delivery data? That also you can get from NSE. Actually, if you see, most of the data is free. You just have to understand the way how do you extract and pull this data and how do you analyze it. That's the most important thing, of course. And yeah, delivery volumes are also available. Open interest is also available. And for this slide, 1 second. Yes. Yeah, for this, what you do is you go to NSE and you do participant wise open interest positions. You can figure that out and you get the daily summary and understanding of everything, and then you can put in your own formulas to understand net call options, etc., etc.
Oh, let's. What was the time frame in PCR OI delivery chart?
Let me just go to 1 second. So here, so as I said, every stock has its own open interest parameters, right? So for example, for this is a full this 1 second. Apologies. Yeah. So this is a full 5 year chart that I've taken, and for 5 years, so I will see the PCR 5 year average. So you can just get this on your own Excel by using again NSE data, and in Excel you can calculate the average PCR of 5 years. Or if you want to look at a more intense PCR study for a shorter trading time frame, I will look at the quarterly average of PCR, like 3 month average. I will take in my Excel, and after according to that average, I will see where my current PCR stands. And if my current PCR is high, it will be a bullish thing. If my current PCR is low, it will be bearish. That's it.
I would request trade the way it's been already presented in this presentation, because once we are used to going into in-depth study of any particular stock or index, that is the best way out to start a trade. Because once you are in the trade, then most of the times few important trades will help you out to be with the trend for next 1 month, 2 months, and that's the time you make massive profits. So whatever Vedant discussed about all the strikes and all, I think that is majorly applicable to the index. Hope I'm not wrong, Vedant. Correct me if
Yeah,
I'm.
yeah, yeah. So you can do the same thing with individual scripts as well, and with the same individual scripts, you can follow this entire procedure. And but the only thing is to understand the overall market momentum. I am taking the indices.
Exactly. No, because market participant wise, whatever data we have, so I think based on that, it will be more beneficial within index, right? Even like
Correct,
the
correct, correct.
liquidity part, if you look at,
Exactly,
even the
exactly.
market
It gives you a
participant,
whole
if you
view.
look at. Correct.
Yeah.
And you can start trading in index and at the same time simultaneously do this study for the individual stocks of your favorite stocks. So that will
Exactly.
definitely help you out.
Exactly. Only issue is, as the previous speaker said, you have to be very good with Excel. That's the most important thing. Creating your own screeners on Excel, that's very important. Understanding how to pull the data, that's just one thing. The second thing is this, and the third thing is what he discussed in the previous thing: deploying your strategies and actually trading. That's how I
Correct.
feel that I
Correct.
should go.
Okay. Another question is from Ashok Bindra. How to find data of participant wise sold or bought option in Nifty and Bank Nifty, also in other stocks?
Yeah, as I said, you can go on NSE and you can go to open interest wise participant positioning, and you can you once you go to that tab, you'll just understand and figure out where the other things are. One thing will lead to another, and you'll eventually have all data in your Excel. Open interest wise participant positioning. That's what you have to see. You're able to look for.
Okay, there's another question from Ankit Hemani. How do you avoid data overload? Some data and indicators work at some times, but they don't work at other times. How do you go about determining which data to use when?
Yeah, so as I said, so for example, after 1 second, I'll just go to that slide. So over here, as you can see, this dip is clearly because of a geopolitical factor. If say I was positioned over here before the move, I would personally not want to actually trade it unless even if the FIs are selling whatever the FIs are doing, despite me following the FIs, if all my check boxes are triggered, but if I don't know my macro situation, if I'm trading on an index or another index, I wouldn't trade. If it's a particular stock that is not related to any of the event or macroeconomic factor, I won't trade it. So I feel when it comes to options, your long view or short view, right, in the whole picture, even understanding macros is very important, I personally feel. So that's why the examples I have taken over here are purely purely independent of any macroeconomic factor or any big news or event. So if you want to take a trade in such an event, you will have to look at other small indicators and take a trade for a shorter time frame rather than taking a long swing trade. Just take a small 2 to 3 day speculative, like not speculative trade, like a 2 to 3 day time frame trade, and use your indicators and get the trade bang on, rather than doing all of this and still not being convinced over where to go long or short. So you should have your conviction in your own trading patterns. If you feel I have done my due diligence, I have got my targets right, then there should be no issue. So that's all I can suggest.
Okay, another question is from Sudhir Kulkarni. That is, what is the typical PCR change for up or down movement of Nifty in terms of percentage?
So as I said, 1 second. So it depends on what time frame you look at. So every stock actually has its own PCR reversal parameters. So as the previous speaker said, back test. So I have also just started, like not just started, I have already back tested a number of scripts where when PCR hits a certain point, it reverses. But again, you can't just solely look at PCR all the time. You have to look at the full all of these factors that I have shown you guys. And once again, take the 5 year average into Excel and look where you stand compared to the 5 year average. Or if you have a shorter trading span, look at a 3 month average, look at a 1 year average. It's a full, just look at your average and look at where you stand right now. That's all I can say when it comes to your reversal levels.
Okay, another question is from Prakash Vaidyanathan. You said you follow FII. What about DIIs? They also today have become important.
Yeah, I completely agree with you. So, but when it comes to the full index, I prefer following FIs and DIs. When it comes to individual stock scripts, I mainly focus around 75% on, not even 75, around 60% on FIIs and the rest on DIs. So I completely agree with you. In today's world, even DIs have become a strong factor. But when it comes to a whole index, that is Nifty or Bank Nifty, I just look at FIIs. So in a back test that I have done, whenever FIIs, according to my backtest, it showed that following the FIs gets my direction way more right and stronger compared to following DI. Though the difference and the drawdown is not too much, but still rather get that extra 2% edge by following the FIs. So I agree with you, completely agree with you.
Okay. There is a compliment for you. Great original analysis, including the new concepts on OI, though predominantly statical. Very, very interesting indeed. Thanks.
Thank you. Thank
There
you.
is another question from Gautam Lunawat. Do you see any bull traps in the current scenario? Any
So
stocks you
current
want,
scenario.
you can point out?
So current scenario, actually, I haven't. So actually, the thing is, I'm still 19 years old and I have to still study. So I haven't been very active currently in the last 1 or 2 weekly expiries. So I can't comment on anything as of now. But if you like my view, you can definitely drop an email. This is my PPT. I mean, email ID. If anyone wants to message me regarding my view on the current market, you can definitely message me and I'll reply as soon as I can.
Okay. Another question is from Manish Chandalia. Uh, he says, many a times PCR is also deceptive. Nifty PCR moves in 0.50 range within 2 days.
So once again, as I said, you can't just rely on one indicator. You have to look at where the FIs are placed. You have to understand every option. What I would do in such a scenario, if I'm not confident about PCR, I would dive deeper. I would look at the Nifty option chain, see where the max OI changes are. Where if the call writers are bullish, if the put writers are, I mean, if the call writers are aggressive, if the put writers are passive, and vice versa. So that's why never. So the previous things that I showed you guys was that yes, you can solely trade on just PCR, but not on something big like Nifty. You can't trade on an entire index just looking at PCR. So that's why the examples in PCR, the bear bull traps and getting trades out of it, the examples that I showed you were purely based on stocks. While the open interest analysis on every strike that I showed you guys was based on Bank Nifty. That's an index. Hope that answers your question.
Okay. Another question is from Mahendra Chaudhary. He's asking how much increase or decrease in PCR you consider for deciding the trend.
Yeah, once again, as I told you guys, average. Just take the average of your time frame. If it's convincing, you should have a conviction in the change. So, example, yeah. So, I have like the PCR over here. One second. The PCR over here is completely charted out. So as you can see, this is a very recognizable change. So if you're not getting the understanding of the numbers in your Excel, you can chart it out and you can see it for yourself to the eyes. You can clearly see a definitely big move in PCR. If numbers are not getting to you're not understanding the analysis by just looking at plain numbers, you can chart it out and understand. Or you can do what I do, take average, compare it to the average of your time frame.
Okay. Another question is for Ramanathan R. Good session, Vedant. For the OI analysis, do you consider future OI or option ATM OI?
So I consider future OI, but for options, I don't consider any specific out of the money, in the money, or at the money strike. I look at where the OI changes, where the inflow of funds are. I wouldn't go and look at the open interest change for a OTM strike. I will just look at where the actual juice is showing me the most, active possible trade that I can take. So while for stocks, future OI, yeah.
Okay. Hello, there is a question from Mahendra. He says, hello, Vedant. Can we get the Excel template so that we can fill the data and follow accordingly?
Depends on which Excel. So as I said, you guys can mail me over here and I can definitely mail you guys which Excel you guys need.
Okay, another question from Naresh Jani. He said how to take opening balance of participant wise to start with.
To start with. So what you basically do is when you import it to your Excel from NSE, you will get different tabs. So as I said, decoding the important data. So for example, over here, I have decoded the index net option. So whatever is the most convincing directional wise. So over here, directional wise, the index option data, overall index option data was the most convincing, because many a times people hedge their positions also using options, and that's where you can also make a goof up, because people want to adjust their deltas, they will definitely hedge with options, futures, whatsoever. So the most important data, decoding the most important data, that's the key element over here. So over here, the most important element was the index option. This was the most convincing, showing the FIs are selling, clients are buying. This was the most convincing for me. While over here, index call options was the most convincing for me. FIs are buying calls, props are selling calls. So it's completely upon which is the most important and most convincing information that you have the most conviction towards. That's it.
Okay, we have good comment from our another speaker, which she's going to speak tomorrow, Smita Parekh. She's saying it was a very good session.
Thank you, ma'am.
Okay, there's a question from Srikant Rao. Very nice uptake on PCR, OI, and OI change. Opens up possibilities for options data understanding. Okay, this is a compliment.
Thank you.
So I think you have answered on the platform. What platform do you use to get the data?
As I said, for my charts, I use TradingView, and for my option data, I mainly use NSE. I pull my data from NSE, and I can refresh it every one minute or so.
Okay. Ajay is asking, after seeing the data, you trade next day for intraday or positional?
So as I said, it depends on your risk appetite, your target, your conviction. So if the data is very convincing, like something like this, 1 second, like something like this, it's so convincing. Like there's call writing everywhere, heavy amount of call writing, and the next put writing is coming at this strike. I will definitely want to do an intraday move in such a thing and juice out how many more points I can. While for something like this, I won't want to just get an intraday juice out of this. If I see that the PCR levels are still being maintained the next day also, I will want to carry forward my position. I won't square my position off. If the PCR levels by the end of the day by around 325 are still convincing, I won't square off my position. So it just depends on the conviction you have towards your data, the way you read your data. That's it.
So there's a question from Manish Chandalia. Which tools or software to use all three data in one screen?
All three data. Oh, for that I use Excel and I use MyFNO, but for MyFNO I basically use it for charting and getting a heat map of the overall understanding of the market. But for options, I prefer using NSE, because as I said, you can refresh it for every one minute. And I think it's possible to refresh it for every second also, but I haven't figured it out myself. How do you refresh it every second? But I think on Zero the Pi, you can refresh your option data every second, and like every second you can see the change in your option or in your Excel sheet on using Zero the Pi. Because using Zero the Pi, you can actually export your option screener into Excel, and it actually you can see the fluctuating changes. So I would recommend that also. To each one's own. I prefer NSE.
Okay. Another question is from Kumar Prasoon. He says, he's asking, in intraday trade, which time frame charts, that is 3 minute or 5 minute or 15 minutes, and MACD RSI trend line changes as per time frame? So please guide.
Okay, so basically when I prefer trading in, I take this as a golden rule, like, do intraday trades when you're very good and experienced at trading. I still personally don't enjoy taking that many intraday moves unless I have a lot of conviction in what analysis I've done. But when you take intraday moves, I would see 1 minute candles, and I wouldn't go by RSI or MACD or any indicator if I'm taking an intraday move while trading. I won't want to see the indicators while trading. I will want to do my homework the previous day, understand all the indicators on 1 day candles the previous day, and then trade the next day depending on that. While the trading session is on, I won't want to look at indicators at all. I just will want to look at my risk reward, my M2M, and my trend lines. That's all I would look at if I'm doing an intraday trade. The previous days when you're supposed to do your homework and prepare yourself for the trade.
Okay. Another question is, how do you decipher the last 2 days Bank Nifty move?
Last 1 second, I'm sorry, I didn't hear the question.
How do you decipher the last 2 days Bank Nifty move? Bank Nifty move.
The last 2 days, matlab day before yesterday.
Yeah, if it is in reference with your presentation, then
He's Vedant. He's referring to last 2 days Bank Nifty moves on Thursday and Friday. It's been a very
in
buoyant move, right, in Bank Nifty.
my
So I think
PPT.
he's referring to no, how you can relate with your
Oh,
concepts is asking
okay.
either
No, so
through
as I told you can drop me an email. I haven't been tracking the markets from the last 2 weeks.
correct.
So if you drop a mail, I can definitely reply to you whatever questions you guys have. I can give you all my views on the macro situation, on the current market situation. Just drop me a mail.
Okay. Lakshmi Raman Wadkar is asking, please take example of Dr. Reddy on 10th August spike.
10th August spike. Once again, you guys come on 10th August. So for me to do the full analysis will take a long time, and I think there's another speaker also. So anyway, just drop me an email ID. I can do a full in-depth analysis and I can share you my entire view, a full summary on Dr. Reddy on a swing trade basis, on a monthly basis, on a intraday basis. Just drop a mail. That's it. I'll reply instantly as soon as I can.
Okay. Okay. P. Srinivasan is complimenting you for super session.
Oh, thank you, sir. Thank you. That means a lot.
Vikas Acharya is asking, can you share links to get these data from NSE?
Yeah, sure. Once again, just drop me a mail. I will share you all the link from where I pull my option data from on NSE and from where I get my open interest participant wise positioning data.
There's a question of Prakash Vaidyanathan. What trade you take based on your analysis? Buy oblique sell futures or buy sell options?
Now, as you know, I don't have too much of a capital, so I'm not too much into selling options. I would I would deploy an option strategy that is more suitable according to my trade book, according to my capital. And as discussed previously, option strategies are very well explained by Mr. Minal. I will definitely use one of them, but I will use one that is tailored according to my state, according to my risk appetite, according to my capacity, according to my targets, according to my stop loss. I feel the strategy that you use is very subjective and relative. So that's all I can say.
Okay, another question is how do you come to know market or any particular stock is overbought or oversold using PCR and open interest?
So you can't find out if a stock is overbought or oversold just using open interest. So let me just show you this. One second, sorry. So over here, I have taken the 5-year screener of PCR. So say my 5-year high of PCR is somewhere here. Okay. But again, this is affected by a geopolitical factor. So let's take another one. So say somewhere over here. So this clearly comes into overbought. If I take the average, this will be definitely above the average. And if you take around 5 or 7% above the average, that will be like, according to me, a reversal zone. To each one's own. The way you analyze this data can be like, tomorrow I make another analyst sit in front of me, he might analyze it in a fully different way. But according to me, this is what I feel can be a reversal zone for PCR. And if you see the bottom of PCR somewhere here, this can also be a reversal. As you see, it bottomed out over here and it clearly gave a strong reversal. So up to somewhere here will be a sell zone, and after that will be a strong reversal zone. Again, if you take the 5-year average of all of this, and if you find your reversal zones just using that compared to its current PCR, that's how easy it is. Just taking your average and finding out the direction. Whether it's a reversal, it's a buy or a sell. Yeah, are there any more questions?
Sorry, there's another question from Gautam Lunawat. He's asking, do you see any bull traps in the current scenario? Any stocks you can point out?
As I said, I have not been tracking the market at all. Just drop me a message from tomorrow. I'll once again start, analyzing how the market is going. All my trading watches will be assembled again, and I will definitely reply to your mails the second I get time to breeze through my screeners and take a look at everything, and I'll get back to you instantly. I'll just keep my email slide open. Yeah, so this is my email. You guys can drop email anytime. I'll reply to it ASAP.
Okay. There are some more questions. With OI data, is there any technical indicator you use?
No. So technical indicators will be your last step. Just checking once if there's any MACD crossover, divergence, YEVO, then just going through RSI once, going through Bollinger Band once. Matlab, I use, you can check Heiken-Ashi, it's you can use whatever indicators you like. I personally see RSI at times just to get, and I draw my trend lines to see whether if there are any triangular breakouts, if there are any, or if there's a scallop being formed, whatever. I just at the end I do my due diligence. I set my stop loss targets, my normal target using clearly technicals and clearly indicators. That's it.
Okay. Rahul Desai is asking, hi Vedant, which trading platform is this? The one on which IndusInd Bank chart is displayed.
So that's on my FNO, and the data has been taken from NSE. And the other charting patterns have been done through TradingView. It's a free software and it's a very good software. I feel TradingView, it's very simple. You can get all your indicators, you can draw trend lines. It's perfect. TradingView is a good app, good software to use, and it's online and it's free. While my
Okay.
FNO is subscription. Yeah.
Okay. Another question is from KV Rao. Were you able to spot current big rally in Bank Nifty?
The current, so the last rally that I spotted and the last that I spotted was this. So since a while, I haven't got time to be on the markets because I'm still studying. I'm only 19 years of age, and I haven't gotten too much time to see the current markets. I have just last thing I caught was the sector rotation shift from pharma to cyclicals, and after that I haven't been gotten time. So now from tomorrow onwards, I'll be tracking the market again. Once again, you guys can mail me over here, and I'll reply to your ASAP.
Okay. Another question is from Mayur Rana. What happens when FIIs are going long futures and hedging by selling calls? The PCR will give a wrong picture.
That's a damn good question. So that's why what I would do in such a scene is I would start seeing the option chain, because that's diving even deeper into where actual strikes, where and in which strikes is the money placed, where and which strikes are being sold, whether calls are being sold, whether puts are being sold. I will get a clear direction. I'll get a strong understanding, like a crystal clear picture, clear cut picture of where the actual money is, on which area and which levels of bank nifty or nifty is the money at, which levels of nifty are being heavily shorted, which levels of nifty are being heavily bought. So if these two of your things do not are giving you a very confusing picture, just look at the option chain. Option chain is the clearest way of understanding. That's the deepest you can dive, and you can clearly see at which levels is where the money at which levels is where is the money at which levels, basically. That's it. Good question, really impressive question.
Okay. Next question is from Ajit. He says, how do you choose the strikes? Any specific parameter to take into consideration?
So what I do over here is I see where the most money is. So where the most notional open interest is, according to that, I look at my strikes. But actually, strike selection is usually when you trade options. So as it's covered by Mr. Mrinal, he has taught in the slides. He clearly showed you guys, two strikes outside ATM, 3% above ATM. So that comes to clearly a trading perspective. What I look at is where the notional open interest is, where the money is.
So there is a now good question. At this young age, this question is from Prakash Vaidyanathan. At this young age, do you trade or do you give recommendations? Compliments
So
on
I
your
do.
understanding at this age. Hats off. Long way to go.
Thanks a lot, sir. That's really encouraging. But before everything, I just want to thank two people. That's Mr. Tushar Mahajan and Mr. Joachim Fernandez. So these two guys have been amazing mentors to me. So, and I have learned a lot under their wing at a very young age. I just want to say thanks to them. And off topic, coming back to your question. Yeah, so I do kind of both. It depends on, as I said, it depends on my risk appetite, on my PNL, on my capital. That's very relative, I feel. Getting a direction right in the trade is, I feel, the most important thing possible. And then, as I said, deploying strategies will be the next most important piece. And once again, thanks a lot for the compliment. That means a lot, and that's very motivating.
But a lot of compliment also. Anup is complimenting you for having a great session on PCR and open interest. He says, thank you, Vedant.
Thanks a lot. So that means a lot.
Vedant, you can tell a story, how we included you in our this conference, and how Ravi,
Sure, sure.
uh,
Yeah.
uh,
So what
went through
happened
his
is,
entire presentation.
yeah. So what happened is, I got a message on my LinkedIn, saying that from Mr. Karan Kohli, saying that, hi Vedant, your profile looks very interesting. I've heard a lot about you from here or there, and I see you've completed the MSCI index and Quant fund, CPSC index. So I said yes. So done all of this. So then he said, would you be interested in talking on our options conference? So first it was very overwhelming, 18-year-old, 19-year-old kid in front of all these top professionals in the market with in 10 15 years of experience. Initially it was really overwhelming. So initially Mr. Karan and Mr. Ravi, they decided we'll have a trial session for him first. So that's when I made this full PPT and I presented to them first, and then they told me first, don't reveal your age. Because if I was in your place and if I heard, a 19-year-old is going to tell me on options, on trading, on OIPCR, on his own thesis on buoyancy or exhaustion, I personally would instantly click on leave meeting if I was, at a very high level of trading. So it was a little challenging, overwhelming, to talk in front of so many people, in front of so many market professionals, in front of such big panel members. So yeah, and finally today was the day, and hopefully it was a success, obviously. So I just want to thank Finbridge a lot for giving such a young guy with such little experience of only 4 years in the market, such a big chance to talk on such a big, expo. So I really want to thank you guys. Thank you.
So just to share with all the audience that including Vedant was definitely a great thing, because as Finbridge, we always emphasize more on the content and the actually value adding thing that someone gets, not to the brands or the overall experience or the big names. After going through Vedant's presentation, I was sure that he should be there at Finbridge platform, because the kind of content that he has come up with have not come across all the other speakers also in the past. So age is not a matter. What
It
matters
is not
is
just
what value add. So that young energy has definitely, rubbed onto all the audience today, I'm sure.
oh, that's great. That's
So
great.
we'll
That's great.
definitely have more such, uh,
Looking
transparent
forward. Looking
sessions.
forward. Looking forward.
Definitely looking forward to have lots and lots of such sessions in the future. Thanks,
Exactly. Looking
Vedant.
forward. Thanks a lot, guys. See you.
Thank you
Have a
so
nice
much.
day.
Or,
Stay safe.
Okay, so
yeah, some
I
more thing
have
like,
one question. Yeah,
Krunal
sorry.
Kumar Patel is saying, sir, age is just numbers. We can learn from anyone who have very good knowledge. Srikanth Ral
Thanks a lot, sir.
saying, oh my God, amazingly superb clarity at this young age. We will surely be hearing a lot of good things about him in the future. So we will
Thanks a lot, sir.
definitely invite Vedant once again in our future conferences.
100%. 100%.
Thanks a lot, guys. See you all. This was very good. Great start for my career also to speak on such a good platform. I'd like to thank all the other speakers for their good compliments and also the audience, most importantly. Great questions, great feedback. Loved it. Great experience, guys. Thanks a lot. Keep trading, keep making money.
And I'm sure attendees would be writing to you. So do you, if you have any questions regarding this, quant trading and derivatives, data analysis, he is very good at the numbers. He analyzes data very well. So you will all have your questions answered. Vedant, do answer all of them.
Definitely. Yeah, definitely. Just drop an email and I'll reply as soon as I can.
All right.
Okay.
Are you
Thanks a lot,
planning
guys.
Thank
to
you.
See you all.
beat Warren Buffett? Are you planning
Yeah,
to beat
so
Warren Buffett?
that's the aim, obviously. So I remember even the previous speaker said, Warren Buffett said derivatives are a tool of mass destruction. I am personally a very big fan of him. I have read The Intelligent Investor, which he recommends. Mr. Graham wrote. So I'm also a follower. So I sleep and I sleep looking at that post at the post. And I wake up
When
looking
I
at that
saw
post.
that, that's why I wanted to ask you. When
Yeah,
I saw that, I immediately wanted to ask you that. Well, let
yeah.
me tell you that Finbridge has given me an opportunity when I was young too. So Finbridge is all about encouraging people even at a younger age. So I was very young that time when I started anchoring for Finbridge. Until date I'm with Finbridge. So thank you so much, Karan sir, and thank you for giving all of us an opportunity on the webinar or on the seminar. Hope to see you face to face one day, Mr. Vedant.
Yeah, same.
Thank you.
Thanks a lot, guys. I'll see you all. You have a great day. Bye.
Mhm.
So we will begin the another session.
Okay, hello everybody once again at 3 o'clock. So you all will be having a lunch break for the time being. That's quite a long lunch break, but please hope to see you all back really soon. Thank you all for attending and hope
Yeah,
you all are
yeah,
having a
please.
great time because we are having a great time.